Good morning. Hey, good morning, Grady. It's Tuesday morning, and we are on the chart. Hey, today we're going to hop into the market today, and I jotted down a few notes from my pre-market analysis, and I took a couple trades based on that analysis, but we're still waiting on price to kind of play itself out. One of the things I wanted to do this morning, excuse me, I wanted to reemphasize is I want to have a time-based reason to enter the trades. To enter my trade, I need a time-based reason to enter the trade. The reason I said that I need a time-based reason is because my interpretation of price and where I believe price is or where I believe price is going to go is all valid and fine. However, it doesn't really matter if it's not within a particular time window. So let's go ahead and take a quick look over here at let's see. Oh, thank you, Tradeovate, for logging me out 2 seconds prior to market open. The price first, but what I need to look at is time. What time is it? What time is it? Let's be honest. That's okay. That's okay. I said all of this stuff, and you're just looking at the side of my head as I'm talking. That's really cool. This is the chart. But I'm glad I did that because when I'm trading, if you decided to do this, you decide to record yourself trading, you should be more focused on trading than you are on whether or not the video is recording you trade. Okay. 9:43 a.m. Is this the first presentation fair value gap? Would you call that a gap? A small, insignificant looking area? And now, right now, it's insignificant. Right now, it seems insignificant, and it will seem that way until an hour from now, and we've moved for 2,000 points from this level. But as far as I can tell, that is the first gap that we've seen here today. Small. We traded right into it. Market price has kind of broken down. It is 9:40 a.m. So the first 15 minutes haven't transpired yet. Down, up, down, 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 and then go back to regular. We'll go back to electronic trading. So that looks like a market structure shift to me. It does look like price is failing. 19 minutes left in the hour, and I believe that will tell us the truth about whether or not price is failing here. Small pre-market imbalance we're traded to here. You see how I'm like right behind it? It's not like I'm not in front of it. I'm almost behind it sometimes. And what I'm looking at is I'm looking for this hour to close. What I end up seeing when I trade before the hour, what I end up seeing is I end up seeing um let's say the close of the prior hourly up close candle is let's say it's 18,120. What I'll see in the opening of the next candle is a run past the closer of the close into the wick of the prior hour candle, then a rejection of that level and then a move down. Entering before it's time leaves you subject to having your stop ran. You're in the right place, right? Because let's say you entered at the close, even at 8:59 or 9:59, you entered immediately right at the close. Okay, pull this forward. This is what I'm watching. So I don't want to enter prior to the macro or prior to the opening of the next hourly candle to see where that candle closed. Unless unless we have such a rejection at toward the end of the hour that we see market structure set up properly even before the close. But then they still have expectation that price would want to probe the high of that wick or probe the consequent encroachment of that wick. So we could run out the high completely of the prior up close candle. We could gap, well, matter of fact, we could gap up and run that high and then move down. But obviously, you can tell by what I'm saying is I'm already bearish, regardless of what I see in price action. That everything that I see here, I believe because of the higher time frame trend, that this is a rally. We're rallying to some point of liquidity at this spot. And once we get to that point of liquidity, then we will continue to move to the downside. Now, if this is a V-shaped recovery, where our rapid descent was a run at the end of the month or the end of the quarter to take out lower time frame liquidity to absorb or to engineer that liquidity for a higher move up. I'm not sure how much consolidation we would see. We could see V shape all the way back through last Wednesday's high, and we would just rally right back to that prior consolidation on the daily chart. And I'm looking at it now as price is doing this. What I was saying is we could rally. You see how we have this consolidation here on the hour, and we'll go to the daily chart. So we had this consolidation on the daily chart, right? So if this is a V-shaped recovery, I would imagine that we could rally as high as the lows of these levels, right? Because that's what we do on the lower time frame. We make a run up, reject down. We don't go below the low, so you don't take out liquidity, and then we start making that right traditional fair value gap on the daily chart. Maneuver a nice long run up, then a fall all the way back down 70% of that total range, and then a move higher. But we would all be consolidating with high resistance probably to get through this range. And every time we saw any up close candle, it would reject us, send us back, and then we would have to continue to price or continue to rally to meet those prices, right? What everybody really hopes is one of a move like, let's say, like what? Let's see if we ever seen one. If I could show you what I mean. Sometimes in price, we have two candles that are exactly the same length, right? Two candles side by side, exact same length, all the way down and then all the way right back up. And so sometimes I think that's what a lot of people are hoping to see. That we ran down, we hit liquidity, we put a long wick on the end of the quarter or the end of the month, and then we open right off that level and we just begin to move our way right back up. It's just price action. Let's go. Let's go. Let's go. Let's go. Time and price. 9:45 a.m. Mm-mm, mm-mm. A little bit of inversion here. Move up. Tap the high. Tap the low. Close to the outside. Dropped all the way through. Close to the high. There's a small gap right here that could be a little bit of a fair value gap. I would hate for it to be the fair value gap because compared to yesterday, this is pretty boring. It's very good price action, but compared to yesterday, it's a little bit boring. Um, there's a small imbalance here. One of the things that I do now that did not do before, and in many ways it helped me, and in some ways it hurt me, is when I first started trading, I would look at one time frame and expect to see, oh, excuse me, and expect to see everything I needed to see on that one time frame. Here we have this drop to this small gap after this inversion. I sounded like a bird watcher. Here we have the nose neck buffle. Look how majestic it is. That looks like the entry. It looks like the entry. However, am I looking for entries? No, I'm looking for time. I'm looking at the time. I'm looking at the time. It's 9:50 and the macro is just about to begin. I am looking at the time. I am looking at the time. Looking at the time. That and I also like and enjoy watching a 5 minute candle close. I've learned a lot from watching a 5 minute candle close, especially at the end of 15 minutes, at the end of the hour, at the end of the 30 minute candle. The last 30 seconds of a 5 minute candle, the last 10 seconds of a 5 minute candle, it will change your mind about price action completely. You see how this candle remained bullish for 4 minutes? You see? It remained completely bullish for 4 minutes. 4 minutes it was up here. In the last 50 seconds, we're back below the open of that price of that candle, and we've done this. Watching a 5 minute candle close is crazy. Because you would imagine a bullish candle is bullish, right? Oh yeah, it's up there, it's going, it's going, it's going. No, last 10 seconds is gonna tell the entire story of the entire candle. This candle was way up here. We took out the higher of this prior up close candle. This prior up close candle traded near the close of this up close candle. In hindsight, we would say, oh yeah, you just put your entry right here at the, but yeah, but you'd be sitting there staring at an up close candle for 4 minutes and 40 seconds. Now we're down below this small inversion. We're at the low of that tiny little pre-market imbalance. This wick just traded to the high of that gap. It's at 9:50 a.m. We had the same conversation yesterday. And the same conversation we had yesterday happened at 9:45, 9:50 a.m. And what did I not do yesterday at this exact time? I did not take the trade yesterday at this exact same time. Boom. Pop up one more time. It's 9:50 a.m. Should I be hitting the sell button right now? Should I be hitting the sell button right now? Huh? Should I hit the sell button right now? And I wish I was doing this live so I could have a live, so I could have live commentary. That's consequent encroachment. That's the high that we rejected. Do 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 do. Do, 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 do. All the kids are like, what is that song? I don't see an imbalance to the left here that would cause prices to keep dropping back into this range. That's the only thing that's disturbed me in to that point. So my eye is just focused on this imbalance pulled forward, and we just keep wrapping around it. So now we've traded into back to this. Oh. 9:52 a.m. We're 2 minutes inside of the macro. Yesterday's 2 minutes inside of the macro, we had already moved 500 points. So You know, welcome back to the real world. Okay. 7 minutes left in the hour. We see where this hour closed, and we're gonna really what? Watch the chart again? Oh man, this is the hardest easy money there is for sure. The hardest easy money there is for sure. My favorite is not favorite. When I say favorite, it's just a FOMO. My one of my things are is seeing a low or an area and not taking the trade because of your rules. Now remember this. Remember this because I'm not trying to coach you. I'm really trying to coach myself. But remember this: when you have FOMO, it really happens when you follow your rules, doesn't it? It doesn't happen. I was listening to Daniel Louisi. He has a channel called Asheville. He runs aggregates in Great Britain, and he was saying something along the lines that the path to hell feels like heaven, and the path to heaven feels like hell. And I was saying to myself, this must be some a British saying because I've never heard it like that. I've heard the road to hell was paved with good intentions. I've heard that before, but this one was a different one. But I could kind of get the spin, especially when it comes to trading and FOMO and following our rules. It doesn't feel good to watch price do what it's supposed to do, and as a technician of the trading strategy, completely be taken unaware by it. You know, you're looking at it, right? You're measuring and you're judging it, and it's doing it, and you're like, what is it doing? Like, why? It's not acting erratically per se. Sometimes there is, manual, intervention, but for the most part, when we make our decisions, there are two things that we can do. First, we can suffer through the pangs, pangs, not pains, but pangs of discipline, which feel like hell. For me, I don't know why I started doing this because I don't like sitting in one spot for a long period of time. I do. I really do. Who doesn't, right? I like to find myself a nice, comfortable chair, a good show to watch, or, some type of a pastime to kill the time. It's 9:55 a.m. The hour is coming to a close in 4 minutes and 12 seconds. This 5 minute candle, the price is kind of not stalled out because I don't believe in stalling out. It's not actually stalling, it's actually doing something. It could just be waiting for time. We could be sitting here in a holding pattern, going sideways, waiting for 10 a.m. And then at 10 a.m., something is going to happen. Um, or just prior, because it's 9:56 a.m. There are 3 minutes and 43 seconds left in the hour. The hourly close, the current price is just below the close of the um hourly candle that's to the left here. See this hourly candle? The hourly close is just above that now. There's 3 minutes and 21 seconds before we have a real close. So what are you looking for, Grady? Well, the question is are we going to close here? Are we going to close in the body of this candle? The next candle, is it going to run the highs of these candles into this imbalance? This candle, will it press higher and take out the prior day high? This, will we run into the imbalance of, and we discussed this, briefly a second ago, but it's still at play. And so this is what I saw in my pre-market analysis. And the range from yesterday, um, yeah, that was like riding a wild bull and not even a tame bull. I guess you can ride a tame bull because I think a wild bull wouldn't be buck with it. I mean, a tame bull wouldn't buck. A wild bull, who knows? Who knows? I'm not a bull rider. But my point was, yeah, it was like riding a wild bull. maybe it's a Bronco. Maybe that's what maybe that's the analogy I was going for. Riding a wild Bronco. But anyway, it was kicking and it kicked my butt. So I'm looking at this hour, and the hour is closing in 2 minutes and 11 seconds. 2 minutes and 11 seconds. 2 minutes and 11 seconds. 2 minutes, 11 seconds. And now here we go with the 5 minute candle. The last 2 minutes of this five, we begin to press higher, which could possibly lend a narrative that we're going to close above that level inside of the imbalance. And what the imbalance that I'm looking at is actually the space between the um the space between those two up close candle ranges. One would be the bearish order block. The other would be an intermittent price range. Mm. Doop, 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 doop. Ba-da-ba-da-bum-bum-bum, ba-da-ba-da-bum-bum-bum. Hey. Bum, 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 bum. Hey, and guys, if you're a trader, right? And unfortunately, and I hate to say this, and I put this when I was looking at the market yesterday, and I really want to say, guys, if you've just recently lost your job, or you've lost most of your retirement, and I know that that's the condition of most people in today's market. And you've had some experience with trading, and you're here today watching this because you wanted to again not learn how to trade, but be entertained while you learn from the professionals. Find yourself a good mentor. I follow ICT, but following ICT for me personally, because of the way my mind works, it's like following a moving target. I'm a little n- not I'm not gonna say that I'm a little neurodivergent. If you said something to me, if you let's say if you they dropped a hint to me, right? My brain will get the hint. Look at this. Look how price is curled over at this level on the 5 second chart. 5 minute candle is open. We just exchanged the hour. We've just dropped down below the low of the prior hour here. Let's see how price reacts at this point. It is 10 a.m. We've run to the low of this imbalance. If you tell me this ginormous imbalance is the silver bullet, I would be like, what? You know what I'm looking for? I'm looking for the silver bullet to be formed in today's price action, not for the silver bullet to be completed with yesterday's price action. That's that gets my goose. Huckle, huckle, huckle. So in the 1 minute, we just ran right back up to the 1 minute high. Let's see if price continues higher. This is the beginning of the hour. So we may need to let 5 or 10 minutes play out in order to form the high or the wick of this up close candle. Now, calm down. Calm down. We've waited all of this time. We've let our pulse fall, right? We've let our pulse fall. We've got into a nice little groove. We didn't do anything weird. We started talking about price action and philosophy and all of this sort of stuff. Now we've come to a critical decision making point, and we're saying to ourselves, should I go ahead and just click get short? Just click get short at this point? I don't think so. I don't think there's enough in price to say to get short right now. Sometimes there won't be. We all know this. Yesterday, when we hit this region yesterday, there was nothing here to say get short. It was literally on the 5 minute, on the 1 minute chart, just a reversal. We just touched and go. Now on the 5 second chart, I'm just watching this price does this and does that. Here, I'm going to go to the 30 second chart. What am I doing on the 30 second chart? I am just looking inside of the body of this 1 minute candle to see whether or not it's telling me. See, because it's traded to the high of this candle, then we broke down. This down close candle is not down below this prior down close candle. To me, that does not seem bearish. It seems like we're dropping to the small imbalance here on the 30 second chart to make a move higher. What I've seen lately on the lower time frame is that those imbalances are used as we move past them, as we move down past them. Those areas are used. Okay, so here's the beginning of the 10 a.m. hour. The macro is still in play. 2 minutes past 10 a.m. Again, on the higher time frame, we were looking at the consequent encroachment of this level. Yesterday, we rejected right at that point. So there's Friday high. There's yesterday's rejection that sent us a lot lower. But because price action was so volatile, there's a possibility that if we ran a swing high, that yesterday's high was the middle of the swing high. Hey. But what does that mean? All that would mean is that today's swing high would just be the third swing high. So you would have, 50% retracement. You'd have a 79% retracement, and then you'd come right back at a 70% retracement, and then you would move lower. So you'd make the swing high into prior gaps that were created in order to move lower. Now, this is mainly this is exactly a record of my personal inversion of price, almost like trading dyslexia. Because in a month from now, and this has happened to me multiple times, in a month from now, I'll look back at price and the way and I'll watch these videos. And that's why I believe this is very important to trade, to watch yourself trade and speak out loud the things that you're actually thinking. Because you're like saying, this doesn't work. This ICT crap doesn't work. But then you don't realize that you're inverting principles or concepts, right? You don't realize that you're doing it until you say it out loud, until you watch it, until at the end of the day, after you're sitting there watching like, oh, okay. Because right now, although I started focusing on price, I should still be focusing on time. What time is it? It is 5 minutes after 10. That means that in this next 5 minutes, the macros are going to come to a conclusion. And then I'm assuming that we're going to go into the next phase of price, which perhaps would be consolidation, because it seems like we've spooled since London session, right? We've been moving up from the pre-market consolidation ever since the close of London session. So as London session closed, we dropped down below London session low by like a tick. Then we popped up, traded back down, and then we've been moving higher ever since. How long did it take us to come to that conclusion? Well, we've been trading for 30 minutes now. I think I've been sitting in front of the chart since, I don't know, wait, 7 a.m. my time. It's been a long time. But it's after the London Open. All right, we're coming to the consequent encroachment of this imbalance. And I believe that this is a 15-minute imbalance. And it is to the left. We've run all of the up close candles in the range to the left, and this is the first imbalance that we come to. Jump, boom, 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 on the 15-minute. I said channel on the 15-minute chart. See this nice, beautiful imbalance here on the 5-second chart. It just opens right here. On the 30-second chart, there's this prior imbalance to the downside here. Gray, are you getting short just because we run that level out? I'm looking at the time. This could very well be a great place for me to do so. Mm. Did I? Nope, I did not. I did not. But the time is right. Right? The time is right. Or is it too early? Ooh, boom. You see that? You see how you did that? I'm just gonna put this level here, mark out 10:30 a.m. Drop down to these down close candles. Remember this level on the 30-second chart that I had from before? What was that, a 5-second gap? That was a 30-second gap. The red line represents the opening of the prior hour. This range is too long for me to absorb the risk. That's too long to absorb the risk. But perhaps this isn't. Still a lot of risk here for me. Looking at the low of this down close candle, up close candle. Looking at the lows, up close candle is a tiny imbalance right there. It's the right time, but wait. It's the right time of day. Uh, Let's be clear, because I know I'm not live streaming. I just wanted to make sure that it's understood. I'm looking at time of day, and it is the right time of day for me to kind of zero in on what price action is doing on a lower time frame. 6 minutes left in the 15-minute candle. 1 minute left in the five. Let's see how this 5-minute candle behaves. It looks like it's bearish just a little bit. This drop down was a retest of the prior prior closing price. So we just dropped down below the prior closing price for just a tick, and we kind of lingered here just for a little bit. All in all, I would say let's hold on for 40 more seconds. That looked bullish. The way we closed, the way we put a wick into these down close candles, the way we dropped down and closed here, the way this candle drops down to the opening price of the prior down close candle. It looks like that way. Why am I not trying to get long? Man, I'm not trying to get long because we've been moving up since the London close. Excuse me. After everything that happened yesterday, we've been moving up since London close. And we probably could even to take out Friday high. And we are just about at Friday high. Almost there. Almost there. Mm. Mm, mm, mm. Mm, mm, mm. I think another thing that becomes one of my fears. We're right at consequent encroachment from this gap. We just tap consequent encroachment to the tick. What's interesting is that the low of this candle is right at the low of the gap. So, we touch the low of the gap, and then we touch consequent encroachment, and then we turned over and we dropped right back in. I wouldn't have imagined that was necessary to do that, but that's what we did. Come on. Come on, come on, come on, come on, come on, come on. Yeah. Come go. All right, okay, okay. All right. All right. On, buddy. Show me something. Show me something obvious, right? Show me something obvious. Show me like, when the candles move, tick candle, show me the page, right? Show me the page number. What chapter? What page? Show me something obvious. Open book test. How about that? Open book test today. That's what we want. Open book. After the market closes, everything seems like open book to me. So let's need that. After I take the trade, it seems like open book after I take the trade. Now that I've waited for price, one of the things that is zeroing me in. I don't know if you guys experience this, but one of the things that's zeroing me in is that I've been sitting here telling myself, don't trade, don't trade, don't trade, don't trade. That's not it. Don't trade. I've been doing that for so long. When I see it set up, all of a sudden my hands are like, should I be trading right now? Should I be taking an entry right now? Or should I still be sitting and waiting for you to figure out to make up your mind as far as what it is you want to do? Yeah, better. This is crazy. Look at this. Razor sharp closes and razor sharp lows. Ugh, ugh, what is that? Maybe that's that obvious sign I was showing you. Maybe like I can see that. I don't see it. I don't even see it, bro. Yes, I did get enough sleep. I had to reduce the amount of caffeine in my coffee in the morning. It was just too much for me to deal with. This up close candle on the 1 minute chart right here, it did not go up above the uh, opening price of the prior candle. What are you gonna do with that, buddy? What are you gonna do? Huh? Oh, it did. It closed just above it, and then we moved up. What are we doing here? This looks interesting to me. 1 minute left in this 5 minute candle. Do you guys think this 5 minute candle is gonna close bearish? Yeah, close bearish. Hey guys, I know you're gonna watch this well after the market close, but what do you think? I'm gonna tell you what I think. I think I'm see low. I mean high, higher high, lower high, lower high. These two lows, man, these two lows are very suspiciously close to each other. There's a this imbalance on the 5 second chart. We just pop right up through it and through it. So price was almost vertical most of the morning. Then we've come into this area where we slowed down. When price slows down, what do I think? Reversal, right? Is that true? That's the first and foremost question. Is that true? Right? We traded to high of that 5 second imbalance. Ah. I'm loving it. Dia-da. Come on. Come on. I'm gonna roll. How many times have I shorted this and lost money? I need to keep a record of that. Hmm. 10, 15. And I believe I was fairly, yeah, I was looking, I have 10:30 marked out this morning for some strange reason. Mm, 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 mm. It's not even a song. You see that? You saw how we hit that constant approach under that gap from below like that? And I immediately went to the sell button. I was looking at the hourly chart, how the hourly chart was coming back down toward the opening price of this hour. This is a 15 minute, sorry. This is a 15-minute high. I was just noticing how that we were failing in this 15 minutes. 13 minutes left to go in this candle. And I was like, hey, guy, go ahead and get down below the opening price of that 15-minute candle. Yep. I was telling that chart in that smoke wagon. Let's see what happens. You know what? I made a note yesterday to study manipulation, CT manipulation. And every time I watch a lot of I skim I skim a lot of different traders, and some traders are more successful than others, right? I think that where I fare in that range is not important. But I wanted to say that um except for the people who make a lot of money, for some reason that stuff is important. For them, that's important. Anyway, that's not here. What I'm looking for is I'm trying to find out. I'm trying to see whether or not we've run the terminus. We came very close to the prior day high. We pulled back just a little bit. Now we're pressing through. Should I wait? Should I wait? Should I wait? I haven't really seen anything that's shown me an obvious entry. If I'm looking at 15-second charts, 5-second charts saying, oh, yeah, I think I see something. I think I see something. I don't think that's it. All right. So now we're at 11 minutes in this current 15-minute candle. 11 minutes in, we've spent about 4 minutes above the prior high of the prior 15-minute candle. Now we've come right back into this imbalance. So what are we doing? Right, we're dropping into reprice to a bullish order block. Hmm? Is that what we're doing? You telling me? You telling me, Price? Come on, Price. I see what time it is. It's 19 minutes after 10. The macro has been passed since 9 minutes. And this is one of those days where I can't really quite understand the purpose of the macro. So macros and manipulation. I think manipulation was the subject that I was discussing because many of the women that trade, some people may call them females, um, they tend to cite manipulation on their charts more readily or more often than guys. And I'm not sure whether or not they like the word. And this is not that. This is not that. What I'm thinking about is what I'm thinking about is that there's a particular thing that I think many traders fall for, and it is manipulation in the market. When we go to a particular level, it shows a direction or it moves in an opposite direction for a particular degree, and then it delivers and spools for the rest of and then it spools. Price begins to spool. Um, and me, hey, this guy right here, I fall for the manipulation on a regular basis because that's exactly what I think I saw yesterday. That was the trade that I took yesterday, and that's how I got tagged out yesterday. Tagged out is a baseball term. Do 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 bang Nickelodeon. I don't know why that often comes to my mind. Come on, come on, come on, come on. Hey, you know what? That's my elbow. You know what? You need a reason for the injury. Proper reason. Reasoning needs to be proper. Was there a trade that nah, hold on a second. Hold on a second. It's 10:21 a.m. But I was actually about to say, was there a trade before this that I could have taken? Right? Because again, when we made this drop right here, I didn't see like a clear imbalance that we could have jumped into. I didn't see it. I was looking for it right here. I didn't see this. I mean, I see a lot of wicks back and forth. On the higher time frame to the blase swoop of the bump bump to the left, I see this high. We drop down and we tap that high. There is just a bit of a wiggle in price where there's two volume imbalances in close proximity. And we drop down to that low. But that's like 7 minutes after the open. Didn't look good to me. Because that's not something that I would want to show people, hey, look. I was looking for this gap in price. There's some overlapping wicks and some. How large was it? I mean, it was this. It was thread. It was like threading a needle. Oh, what? Oh, wow. Oh, wow. It's a little warm in here this morning. Had a good ride though. Took the bike out nice and early. It was brisk here in Houston. Well, here in Katy. Very brisk. Yesterday, when we got out of the market, there was a jet flew over our house, and it sounded like a commercial airliner about to land on our roof. Scared the crap out of my daughter. Me too, as well, because it sounded like, and I'm not not to. It sounded like an aircraft, not aircraft carrier. It sounded like a passenger plane about to land in our neighborhood. Is what it sounded like. You see this sort of a fall down here on the one. Look at this. That's a little different. We traded to the wick of this up close 1 minute candle. Are you guys giving me false flags here? Are these false signals for me to see? 5 minutes left in the 15-minute candle. Now we've kind of just slipped just a little bit. There's nothing more painful than a 15-minute consolidation. Oh, nothing, man. There's nothing more painful than that. There are things more painful than that. Okay, this red line represents the 15-minute close of the prior 15-minute candle. Beat 'em bum, beat 'em bum, beat 'em, beat 'em, beat 'em bum, beat 'em bum, beat 'em bum, beat 'em, 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 ba-da-dum, ba-da-dum, bum. Where would I put if I did an order? If I created an order here, where would I create the order? Huh? Where would I create the order? Would I create it like here? Would I say like create an order? No, I just sell stop loss to what right here, and then take profit to like there. Would I? Is that what? Would I? Does that look like what something like I should do, or is this my manipulation? Right? Is this my manipulation, or was that my manipulation? Because we just took the high out, but we failed to reach PDA a prior day high. So I would not take a trade in. Not right below prior day high. We've traded all this distance to come within spitting range of Friday high and not take it. I have to be seeking suspicion. Oh, I have a seeking suspicion that this move lower was my manipulation to the downside. And for me, the manipulation would get me into a trade to get me stopped out later. Are you serious? You're not going to take the high of that prior wick? Well, Grady, you did say it could be a swing high. Yeah, I know. But, I mean, come on, man. I don't want to be right. I want to be profitable. I want to be right. Okay. Let's stop. Let's stop. Mm-mm. Do, 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 do. Do, 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 do. Mm. I think it's very interesting how this era of trading came along with social media. Could you imagine not having social media and then having people like sitting in their house in front of the computer in silence? One of the reasons that I actually started recording myself trade is because I was sitting here in silence, just in this sort of the silent, just thoughts just streaming through my mind while I'm sitting here. Come on, come on, come on, come on. Terrible, terrible. So at least I could just spew the nonsense that's coming out of my mind as I'm watching price vacillate back and forth. My expectation is now to see us run this high. Once we run that high, what am I going to do? What, when, where am I? How am I? What I would love to see, you know what I would love to see right here? If we ran this high and we made an immediate reversal, what I would love to see is this short term high on the 1 minute is right here. I would love to see like a gap form, right? I would love to see a gap form right here. That's not what I wanted to see. What you doing? What are you doing? I would love to see a gap form right here, but it would be utilizing. Well, did we take the prior high? Did we go past the prior high? No, we didn't. No, we didn't. The price is starting to do something different. We can tell. How can we tell? Because it's um starting to twitch, right? It's starting to do this. Mm, I now as a reactive trader, because when I first began trading, I used to trade small caps, high volume small caps, mid cap. I used to trade I used to watch The Humble Trader. I used to watch um actually I followed her trading plan in association with Ross Cameron. They have very similar sort of a breakout strategies. And to this day, I am still kind of plagued. I hate to say that by the um reactivity of breakout trading. So, right, breakout trading happens in a sort of a fashion, right? Where there's a front side and then there's a downside, right? Especially if price action is bullish. And I just noticed how we just broke down below the opening price of the 15-minute candle again. There's a lot of stuff in the way right here at 10:30 a.m. I just noticed that we have two lower closes. Okay, that's just something that I noticed. I noticed that we traded to that imbalance once again. This 2 seconds ago is where I wanted to put my short, right? I was like, where would I put my short? And I was like, no, not blah, 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 blah. We run near that and then we break down. Are there any breaks in price? Oop. Where was the gap? Is there a gap that was formed at 10 a.m.? This is just prior to 10 a.m. We traded down below. We closed higher. We traded the consequent encroachment of this imbalance on the 1 minute. This imbalance was created at 9:58. Here at 10:30, we've turned over. We dropped right into, right down to, right down to, right down to. Is he going to take the trade? That's 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 highly debatable right now. I'm really debating it. Really debating it. Really debating. Really debating. Really debating. I don't really like it. And the reason I don't like it is because it seems as if we turned over and we've come right back into the closing price of that. Sorry. In the closing price of the prior 1 hour candle on the 15th, that's matter of fact, that's 15. This is the closing price of the prior 15. There is an imbalance on the 15-minute. If I could pull this back, and there's a lot of things that I am watching concurrently because I have not ignored many of these things. Here's the 15-minute gap. We traded down below consequent encroachment of it. We traded up to this joint in prices in price. It looks like a B balanced price range between that and that. The low of these candles is still in alignment with the low of these candles. And the close of these candles are still in alignment with the close of these candles. And these wicks did not go down below these wicks at all. The length of these candles superseded that of the prior candles, but still, beyond that, nothing. Please don't be a 15-minute consolidation. Those are the worst. If you ever see 4 or 5 15-minute candles that are traded in the same range, they will give you more lower time, lower time frame signals. And you know what to do with. You see how the wick hit this candle and then dropped right over? If you're an ICT student and you saw something like this, you'd say to yourself, I'm getting short. You see that? I'm losing it. I'm losing it. And again, if it's a consistent 15-minute consolidation, again, it's going to give you gaps, multiple gaps over and over and over on the 5 and also on the 5-3 and also on the 1. There are going to be multiple imbalances. We're going to trade back and forth these imbalances. If you use the lower time frame gaps, there are going to be more gaps. And the reason for it is simple, right? In that consolidation, it's really just doing this, right? It's going to say 70% retracement. Take the high. 70%, 100, 70% retracement. Take the high. 50% retracement. Take the high. 70% retracement. Take the high. 79% retracement. Back up, right? So it's going back and forth just like that. If you run the fib, you'll see it's just doing it back and forth, back and forth. So once it takes a high, then it'll say, okay, well, let's run to the other end. Oh, okay, well, let's run to the other end. However, we haven't seen anything lower than these levels. So it's still above that 15-minute closing price as it just goes back and forth. This goes back and forth. So it could be very well bullish, but I don't want to get bullish right here. I don't want to get long right here because this is my honest belief. I believe as soon as I get long, we're going to run prior day high. It's going to be 20, 30 points, right? And then it's going to hesitate for a second. It's going to create what appears to be a bullish fair value gap. It's going to slide down into that imbalance. It's going to rise. It won't leave it. It's going to rise to the low of the opening price of the prior up close candle, and then it's going to extend past all of this in one candle. It's gonna hesitate, 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 and it's gonna stand past all of this. Why you say that, buddy? Because I've done it too many times. I've traded it exactly like this too many times, where I was so geeked up and excited. Oh, I finally got in, and everybody else is like, yeah, but look how overextended the price is, man. We're way out of that range. Mm, I don't like your interest. It's a self-soothing tactic. Price looks a little bit fuzzy and hairy. It looks like a helmet right now, right? It's like there's just a small, soft curl over. I'm sorry, like a little dome. So he's like, oh yeah, price is going up, price is going up, price is going up, price is rolling over, price is rolling over, price is rolling over. But at what point would be the tipping point, right? Where is the tipping point? Where's the tipping point? This is the one. Now, see, people talk about animal patterns and all this kind of stuff. I've never heard anybody say anything about an animal pattern. I've heard of a unicorn. A big unicorn, is that an animal? I'm not quite sure. Um, 37 and 37 and 37. I missed it. Did I hit that button? Oh, I missed it. I looked at the 15-minute chart for just a split second when we dropped down below the low of the prior 15-minute candle. When we dropped below the low of the prior 15 minutes, I looked for just a second, and as soon as I turned back and looked, and I saw where we were inside of that lower time frame imbalance, I was like, "Oh no, let's get short." Now watch this. Did I save myself some grief? I really did. I really did. Was that the manipulation? How would I know? How would I know till after it rips my face off that's manipulation? Somebody let me know. Point me to a video or something that really clears up when price goes that opposite way, when it starts to look, because we can all see this smooth we can all see this smooth curve. We can all see that. Ain't it crazy? I've actually on a video, so we can all look at it together. We can all see that smooth curve. It just looks like price is coming to an end, right? Price is about to fail. Price is breaking down. Then we look at this 15-minute level. Of course, now it doesn't look so much like price is rolling over. On the 5-minute chart, we have a chorus. It looks like a sheet music over here. Sheet music. The little black lines go up and down, up and down, up and down. I mean, because that's what it looks like, sheet music, right? Like a song. Back. Right. So that right section looks like sheet music. All right. So price trades in a sort of a smooth pattern, and then it starts in a consolidation sort of like this. It just starts these stabbing motions, like stabbing motion. When I'm alone in my room, sometimes I stare at the chart. See how you see how I it's okay. All right. Okay. All right. So now we've curled back over below that level once again. We curled over. We had a perfect little curve. Then we traded outside of it. Now we traded back down to this level. Now, what are we doing? Out of left. I feel like if I took a trade, I would literally scream out, I fell for it. That's how I feel right now. Oh, I fell for it. And that's one thing that you'll get tired of, just like I've gotten tired of, is quote unquote falling for it. Like, look, I fell for it. I thought it was gonna pay, but it didn't. It turned out to be fugazi, fugazi. It's a woozy. It's a what's it? See it? Now we're down below that level. How much time do we have left in the 15-minute chart? 2 minutes and 37 seconds. How much time do we have left in this 5 minutes? 2 minutes and 28 seconds. I don't really trust this 5 minute candle. I'm not sure it's going to actually deliver. I know we've crossed the middle line of it, right? So the middle of a 5 minute candle is roughly 2 minutes and 30 seconds in. That's when, 2 minutes and 30 seconds. You add those two time variables together, then you will get a full 5 minute candle. However, once we've crossed that, then we're in the second half of the 5 minute candle. However, the last minute or the last edge of the last minute is equally as powerful. Boom, right here we crossed and tapped that level at 1042. 1042, I believe, was about right there. When I started talking about the middle of the 5 minute candle, then we begin to slide. Is this another manipulation? We're just sliding down. We're just in a consolidation, right? We're just sliding down. We're just touching levels. We're just moving back up. We're just, it's just like a very sensual dance, right? Just look at this right here on the 5 second chart. That's nice looking. What do I have on the 30 second? Matter of fact, the 15 second. What do I have on the 15 second? Do I have something that I can put some risk behind? I think I'm too late to enter. It's already started to make that delivery. When I started talking about we were at 2 minutes and 30 seconds, we were here. Now it's delivered to them. And then that part of the trade I let go by. Minimal risk here. Well, no. I say that now. But again, like I was saying, is that are we just going back and forth, right? So we finally have taken these relative equal lows out here. 1, 2, 3, 4. All of these lows were right here. We finally took those lows out. What's next? Another one of these lower time frame imbalances. We're just kind of sitting here. 5 minute candle is coming to a close in 20 seconds. First down close candle on this higher time frame that would break market structure and move to the downside. On the 1 minute, in the 1 minute, we see this one, right? Because we say, oh yeah, look, there's one and then there's two, right? There's one and then there's two. The third move up doesn't take out that low, that high. Oh look, guys, there's one, there's two. The third one doesn't take it out. This looks like a breaker. We have a new 5 minute candle. Let's see if there's any life to the upside in this 5 minute candle. Come on. Wow. If this was the breaker, then that's where we would be trading to. Exactly. That was aggressive. Shoulders. 4 seconds. Oh man, I didn't see it. Hold on, get back, get back, get back. You see that small cap right there? Oh man. 1, 2. What's happening here? Oh, rejected. Oh, did I blow my account today? Probably did. 973. I ain't gone it. No, that's not right, is it? No, y'all tripping. Y'all tripping. You guys expect me to post this stuff on the internet? No, embarrassment. Oh God. The embarrassment. It's too much to lift. Okay. Okay. Did you see where I hit shorter? I sold. This is where I sold at. Please, 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 please. Rewind the video. Rewind the video. Rewind the video. If this right here as we went above this high, that's why I took my entry. Please stop this out. Please stop this out. Please stop this out. Please stop this out. No, don't come down here. No, matter of fact, let's do this. I'm gonna stretch this thing out because this is something I really want to share. I really want to share this. Why? Because you saw where I try to take my short, or I reject it. Now, time and price are the most important things that we have here. Um, and I hope that, and I know I have your attention because I showed you that this morning when I was trading, I blew my account, and then this is the area where after all of the day has gone by, I decided I wanted to try to get in. Now, this is a phenomenon that you might experience yourself as a new trader, that you probably took shorts in your account here, and then you took a short here, no, here, and put a stop loss here and had it taken here. And you probably took a short here. It comes to into profit, comes up here, and then takes you out here, and then it does this. Don't be discouraged by that. Don't let that discourage you. Or focus on time as opposed to the focus on price. Um, we could still be in a 15-minute consolidation, so I'm not really tripping because we look here at this gap. So I'm not saying that I was right. What all I was saying is that it would be hilarious. It would be hilarious for me to wait all day. Not wait all day. I did trade the pre-market a little recklessly, obviously. And I didn't even record it. I saw some opportunities and I jumped in. But this is something that'll happen, and it will just happen. So that's where you saw me click the button multiple times, right? You saw me click the button multiple times. That's the spot. Come on, don't play me. Don't play me. And this is not the first time that I've experienced this particular type of a thing. Normally what happens is I will have opportunities through here, and I'll get short, or see how the market's coming up, and I'll get short, and I'll get short, and I'll get short, and I'll get short. This isn't even a realistic stop loss because right now we're already basically 2 to 1 already, so that's decent. If I move this to here, that would be reasonably 3 to 1, and that's what I would do. I'll put that right there, reasonably 3 to 1. We may not even make that, but my point is you gonna reverse on us? That's fine. That's fine. Remember that gap right there represents a 15-minute imbalance. The 15-minute candle leaves the higher imbalance, moves down 2 down closed candles, and I'm speaking as if you can see what I'm seeing. Again, you see how the prior day high is still right there and it's untouched? That would be the only thing that I would have any concern about at this point, is that prior day high was not ran. But if it's the middle high and a swing high, I wouldn't want to see it ran. I would want to see us run roughly 87% of the range from the high to the low. I mean, if yeah, 87% of the range as far as a retracement, and then to see us begin to break down. But look where we're not breaking down, right? So this is 2 to 1 on the risk. And my stop loss, look at this stop loss placement. Look at this stop loss placement. My stop loss, I really would have placed it right there, right? Above the that closed candle, down closed candle right there. Not this one or that one or that one. Um, but that's not where it is. It's literally something that I would never want to see traded. That's literally 113 ticks, 28 hands, 7 hands. Normally, my most successful trades, I want to see everything happen within $5 if I'm trading a mini. The way the market is moving right now, see, 5 handles is right there. 10 handles is right there. What are we doing down here? Still moving lower? With the time of day, it's coming up to 11 a.m. This could be displacement at the macro. This would be this would be a place where, as I'm speaking right now, I would become very insecure about whether or not this trade will continue lower. Yeah, I'd become very insecure about whether or not the trade was trading lower. It would move down into the wicks of the prior candles, was 39 seconds. And right, I just want to see whether or not we would even get this low. Mm-mm, mm-mm, mm. This is the type of guy I am. Huh, break even. Wow, it's that's embarrassing. That's embarrassing. But you know the best part about being a demo trader? If you're trading demo, you don't have any of the secondary, what's the word? Secondary reflex. Secondary trading reflex. And what I mean by second, look, that's like 2 ticks, right? It's like 2 ticks on that move. And that's yeah. But you don't have any of the secondary trading reflex sometimes when you're trading demo. But let's not talk about that. Let's talk about how, let's talk about how, come on, look at this. Look at this. Look at this. Look at that. Look at that. What? What? What are you talking about? Look at how we made a high and then we made this low. Then we made this higher high. Then we made a lower low. Then we made a lower high. And then, boy, look at that. Oh, and look how I sang songs, did beats, started rapping. I did everything I could to wait for the right time. And when we got to the right time, I don't want to talk about it. I don't want to talk about it. I want to talk about it. This is trading entertainment. This is trading entertainment. Thank you guys for watching. Please like and subscribe. And I hope that even in the middle of all of this ridiculousness, that you guys can understand what a market structure shift looks like just a little bit better. Because look, this is what a market structure looks on the lower time frame. On the higher time frame, what does it look like? Well, we'll go as high as the 1 hour chart first. The market structure shift on the 1 hour time frame occurs in this wick as we took out the wick of the prior candle, prior hour. Is that locked? Interesting. I couldn't seem to grab it. As we took out the high of this prior hour, which is right here, right? So we go up above the prior hour. We take out liquidity above that. We approach the prior day high. We don't quite get there, which is odd to me. It's still going. It's still going. This sometimes happens when you begin trading. I don't know if it happens years and years later for you guys, but you know, people have been trading for much, much longer. But when you can't trade, that last trade that you attempt to take, or the last trade that you take, or the last trade that you would have taken, it's probably going to go for the rest of the week. It's gonna not going to stop. And every time you look at the chart, it's going to say your name. Right. Great. It's going to say when you look at that trade, it's going to say like, subscribe, like, bell notification. Yeah. So this is what it looks like on an hour chart. This is trading entertainment. I'm trying to tell you. Oh, okay. So on the hour, that's what it looks like. On the 15-minute chart, remember these levels represent the movement of price action as we go through the market structure shift. And on the visual order, I want to bring it to the front because I want to keep that visible. But this is what it looks like. So we have this high, we have a higher high, we have a lower high, right? That is the swing high. Swing high. What is he? Is he saying? Is he speaking Chinese? No, he's saying swing high, right? So there's a swing high right here. High, higher high, lower high. And it's happened. This is happening at the 15-minute level. At the 5-minute level, we have a consolidation at the highs. Right? We have a consolidation at the highs. Remember, I believe this red level represented the closing price of this 5-minute candle, and then all of these wicks are above this level. Now, what was the first thing that I saw that began to manipulate me into the trade early? What was that first thing? Remember, I drew it out. It was when price first rolls over here. And I say, oh, look at that low and that lower low. Then I kind of just brush it to the side. Now, that was the market structure shift. This, we run back up into the wick of this no, the wick of this up close candle. And that's a lot on the screen right now. Great. You got a lot on the screen. Yes, because as we begin to get to the end of price becomes very porous. There are a lot of imbalances toward the end of price that seem to be significant. And we'll leave that last one. So this is the 5-minute chart. Now let's go down to the 3-minute chart. No, I said 3, not 30. On the 3-minute chart. On the 3-minute chart, market structure shift isn't quite as clear. We have these two candles move up to the upside. What are these two candles called? Class? That's the bearish order block. These two candles are the bearish order block. If we take these two candles and we stretch it forward, we're going to see that as we run up in here. Wow, when we run up in that thing, as we run into this level, as we run higher into this level, then we'll probably notice, and I'm going to do this just like this, just because I want to see for myself, because doing the work is where you get the benefit. It's not in the money, it's in the work. That is not true. These two candles together do not represent the bearish order block. Why? Because if I look at this as the mean threshold, we're closing above the mean threshold on this particular level. This is a 3-minute candle. What I would like to do is I'd like to pull it in tighter, and that represents the mean threshold. This one up close candle. Why? Because this is the 3-minute chart. Because we're on such a low time frame, as we get down to the 1-minute chart, then we'll start seeing, oh, you see, this is the highest up close candle in the range. We have wicks above that. Nobody's closed above this up close candle. That was a good indication. Red dot 1 here represents our first little swing low. Boom. Red dot 2. Looks like Christmas over here. Then we swing high. See what I'm telling you? You see, while I'm seeing things, I'm thinking other things. Look, I'm trying. But it looks like Christmas over here. We're doing a Christmas tree over here. Then we have a swing low taking out this next low. But these highs are still not closing above that high. Here's that 5-minute high. What's important about the 5-minute high? Once we close here and we rally back, we've respected the lower time frame. Now we're beginning to respect the higher time frame, right? We're respecting the lower time frame first, then we begin to respect the higher time frame. But the bias is going to be clearly seen, obviously, on the higher time frames. But then on the lower time frames, then we're going to see hindsight as, again, I said that earlier in the video. I'm not going to say it again, but I'll probably say it 300 times. Hindsight is 2020. Then we swing back to this point, right into the close of this up close candle, just shy of it, and then we deliver to the downside. As we break below this level, and this level represents the 15-minute high, and we retrace to it just after The middle of the 5 minute candle, roughly 2 minutes and 30 seconds into that 5 minute candle, we retrace back to this level. Well, Grady, is that where I enter into the 2 minute, 5 minute candle? You can, but you're gonna do stuff like I just showed you. If you do that, if you just find any 5 minute candle and you just go in at 2 minutes and 30 seconds, you'll have this type of experience where you'll be sitting here clicking the button, and your broker will be telling it will say, hey guy, you don't have any money. Hey guy, you're done. Hey guy, you're done. Click the button. Click the button. And I mean the like button. Like and subscribe. I said that already. I'm still on this. I'm still on this because this I am relieved that somebody can see the stuff that I go through. That you work so hard, right? And you struggle. And then when the opportunity arises, you've burned all your powder. Be patient. Be patient. And I'm not gonna steal. I'm not gonna steal from Sage by Matt. But he says be patient and smart. Well, I'm gonna steal from ICT and say, hey guys, time first, then price. As we watched this candle develop, what were we watching? We were watching the time on this ticker, right? We were watching this time. I'm down here in this level. I'm down here. We're watching this time, and we were watching this time, right? We were watching this time, and then that price. This price is associated with a certain time level, 15-minute close. Okay, and I think, and I'm rehashing this, and I've said this over again, said this over and over again. Now, I still do not know where the manipulation is on this chart. If you can tell me, where is the manipulation on this chart? Where did it tell me that it was going one way to make me believe that we were going that way? Is this the manipulation? Right? Accumulation, manipulation. Maybe this is the manipulation leg. Is this manipulation? I don't know. If you know, and let's see how would I do this? How would I do this? Um, how would I do this? Do 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 Nickelodeon. I think I'll do it like this because I'm not sure. There is, unseen by most, an underworld, a place that is just as real. Well, I've never even used this trash before, but I should. But not as brightly lit. A dark side. That's like trend-based fib extension. All I want is a channel. Do you guys see a channel here? Ready? You should get more prepared before you waste your time on this video. If you've made it to this point in the video, it's all good. I appreciate you. I appreciate you stopping by and watching. Um, Thank you very much. And I just wanted a fib retracement, fib base. This is a fib channel. I've never really used this fib channel like this. So I am tripping on whatever this is. There's a guy on the internet, he's using fib channels to no, he's not. He's no, he's not. Okay, style. If you guys do not know how to use this stuff, just you'll just double click it, you'll find the little cog icon. Now, I do not need anything in the 4 or the 2. I do need 1. I do not need this. I do not need this, nor this, or that, or this, or that. Or I don't need 1. No, I do need 1. What is this, 1.68? I don't need 1.68. The only thing my only question is this the manipulation leg? If this is the manipulation leg, let me know that that's manipulation, right? Or is this manipulation, right? And I guess this is the way I'll describe it. Now, if you guys answer this question for me, I appreciate it. If you don't, that's fine. So is it this bid? Is it this or is it that? And look, this or that, right? Is it this or that? And by this, I mean this. Is this manipulation? I mean, because we did go down, right? We moved down, we moved up, and then, or is it this? Is it this level? Is this the manipulation? I mean, I don't know. Because is it this, or is it that? No, no. Is it this, or that, or that? No, I'm just kidding. No, see, no, seriously. I'm not, I am very, very serious. I'm not quite sure about manipulation. And I will go back and I will watch that video, and I suggest that you do too. If you can tell me what manipulation truly is, I think that maybe that'll help us understand how to avoid it much more in the future. Maybe this run above this high could be considered manipulation if we have a market structure shift at this point. I'm not teaching. This is trading entertainment. I'm trying to find out for myself because if I saw this again tomorrow, what would I do with it, right? If I saw this again tomorrow, would I feel more comfortable? Would I be more comfortable? Will I be more um confident in making that decision or taking this trade? I know for sure that I was very confident with taking this trade because I had already marked out these two lows as um as a market structure shift roughly, and I'd already marked out how we began to respect the closing prices of the up close candles, right? So first we're going to respect the highs, then the wicks, then the close, then the open, and then the tail, right? So as we're trading down that in order block, as we're trading down the order block, then we're looking for what? We're looking for running past mean threshold with a wick, closing below mean threshold, respecting mean threshold, then respecting the candles that closed below mean threshold. Once we begin to respect those candles, then we know that we're going to the downside in that particular bias, and then it's the reverse, going the opposite direction. But where's manipulation? What is the manipulation? The first thing I saw before price did what it did was this, and we'll go back and review. I saw this. Price looked like it was doing this. Is that the manipulation leg? This would be manipulation. Please leave a comment if you know if you see what I'm saying. Please leave a comment. All right. Thank you. Have a good one. Good night. God bless. Oh man.